After this huge red candle, many say that it's a trend reversal in Nifty. Whether trend has changed Nifty or is it just a correction? Do watch the entire video and understand the analysis of Nifty for the upcoming week. Hi guys, welcome to my channel Pure Patterns. Today we are going to analyze the chart of Nifty for the upcoming week, that is 25th August expiry. Before I proceed with the video, let me take a moment and thank people who have subscribed to my channel Pure Patterns. We are 50 plus subscribers on my channel right now, so I would extend my gratitude, as well as I'm very thankful for the people for trusting this channel for the content what we make. So nevertheless, I would also thank those who have not subscribed but still watching our video. I'm also thankful for you people for trusting us and coming to our channel and watching the videos. That being said, we'll go ahead and analyze what is there on the Nifty chart. Well, I've clearly said in my weekly analysis in the previous video, one of my previous weekly analysis video, that Nifty is heading towards this supply zone, that is 17,900 to 18,100, right? So it has started its rally from 15,183 to 17,992, a clearly 2,800 plus points rally. So somewhere Nifty was supposed to stop. What better zone it can find than this supply zone, right? So this supply zone was one of the critical levels for Nifty to pause. One, it is being supply zone. The second being 18,000, that is 18k, being a very psychological level. In my previous video, I have clearly said two things. One, Nifty is gonna pause or consolidate here, or might reverse from here. That's the first thing. Why? Because I have clearly said that I don't see this rally is backed up by volume as much as this rally. You can clearly see this rally has this volume backing, which is increasing volume, whereas in this rally you don't see that volume, which is lesser than the average volume, right? So I have clearly said that it might pause here. So as predicted, you can clearly see that on Thursday there was an inside candle and there was a profit booking on Friday. So therefore you see there's a huge red candle being formed. So in this candle, what you can clearly see is that it has taken the lows of 3 days. So where are we heading? What are the potential good levels where we should trade? We'll see in our next sessions. But before that, let's analyze what is there on weekly chart. You can clearly see in the weekly chart there is a rejection candle which is being formed, right? There's a rejection candle which is being formed at supply, right? There's a supply. So there can be a potential consolidation here near this zone. That's the first thing. Or there can be small correction. Till where it can correct? Definitely this correction is not only for the next week. This price might reach in next few weeks, because this is a weekly chart. If Nifty were to correct itself, then it might find some support at 16,800. This is for the upcoming weeks. You can also see that if you consider this rally, somewhere around 16,900, you find 38% retracement. If you put a Fibonacci from this point to this point, somewhere at 38.81% of this rally is somewhere around 16,900 or 909 somewhere. So next potential, if we were to have a healthy uptrend going forward, then Nifty has to correct itself, and then the potential correction which I see on the weekly chart is 16,900 to 16,800. 16,800 is more reliable because of the I'm a great fan of a price action. So I would say 16,800 would be a good buying zone if somebody is looking to go along or going long on some of the stocks which you want to invest, then 16,800 could be a good zone to buy, provided Nifty also should make a very bullish kind of a pattern near this zone. So if there is a bearish or high bearish kind of a setup which is being near, then we have to wait till bullish pattern is formed. Okay, so that's all we have on the weekly chart. What is there on daily analysis, or what are the potential levels on the daily chart? Let's go on to our next session and analyze what is there on stores. On daily, clearly I've said that this is the zone for profit booking for the professionals. So that's what has happened. Nifty formed an inside candle on Thursday, right? And then there's a huge profit booking which came in on Friday. What this candle has done is it has taken the lows of 3 days. So it is very bullish, it is very bearish candle which is formed. You can also see that there's a volume which is higher than last 3 days, right? It clearly sees that you can clearly see that the huge profit booking which is coming in. Professionals have booked in their profits now. So what are the potential levels one can think of on the daily time frame if Nifty were to correct? Then let's see what is there. So first thing what I see on Nifty is this is the level. In weekly also I have clearly said that 16,800 is one of the zone. But prior to that, for upcoming expiry, I can clearly see that there's a rejection from this red candle, a pin bar being formed, right? So I think there are many buyers who are active here. So you can clearly see, right, there's a huge rejection candle, 2 rejections candle being formed at 17,350. So clearly see that there are buyers who are active at this level. So what I see is if Nifty were to correct in next few days, 17,450 to 17,500 would be the zone where Nifty has to come here, and from this there can be a small bounce from 17,000 these levels. There can be a small bounce for the Nifty if it were to have this correction. So from the daily perspective, if somebody is waiting, then if we break this level, the low of Friday, then we might head towards 17,500. If you are shorting, the moment it crosses the low of the Friday with a bearish setup in the lower time frame, that is hourly or 15 minutes, then our target for next few days would be 17,500 to 17,450. After that there can be a small bounce for this expiry. This is the range. The range what I see is for this expiry, what is the range I see? I see a range of 18k to 17,500. This is a range where Nifty can expire. So what are the potential levels, or what is the intraday setup for the Monday or maybe Tuesday? Let's go to 15 minutes and analyze how to trade or how to take the intraday trades in the next session. Okay, on 15 minutes you can clearly see that there is a consolidation of price here, right? After this fall, you can clearly say that there's an inverted pole and flag, or whatever you say, whichever pattern you are familiar. But I don't see all those. You can clearly see there's a fall and there is a consolidation. Suppose that we open flat on Monday and we have this consolidation, right? So if we break out of this zone, either on the upside or on the downside, right? If we break this on the downside with a bearish pattern, right, with a bearish pattern, then we are heading towards this support, that is 17,600 would be our next support for the intraday. And if we are breaking this as well, then we are heading towards 17,480, okay, on the downwards. So in the same way, if we open flat and consolidate, break this price zone, then definitely we are heading towards 17,900. So if you are taking any buy setup with a bullish setup here after breakout of this, then we are heading towards 17,900. We should book our profit at 17,900. There's also another setup which will be formed if we are going towards 17,900. I'll tell what it is. Let's say we consolidate here and we are breaking out of this, right? So if we reach 17,900, and if you see any bearish setup here, right, that is a neutral candle followed up by a red candle here, you can clearly see there's one top, second top and third top, and if we have this, we can further fall from this supply again. It might not be at the lower level, it can go beyond this as well. Okay, maybe somewhere around 18,020 or 30. Okay, so there can be three confirmation. One is the triple top, right? The other is the supply zone, right? And the other confirmation would be, if we take the confirmation like bearish setup, then we can have another potential from fall from 17,900 plus to again 17,750, right? This is one of the setups which one can play if Nifty breaks out of that zone and reaches 17,900 plus, and then you can take a bearish view once it reaches that supply, provided it should form a bearish setup there. So that's all I have from the chart which I see on the Nifty. Let's go to the option chain and see what is there in the option chain for the upcoming expiry in the next session. You see, Nifty, you can clearly see this is an option chain of Nifty, and you can clearly see that there's a call as well as put options writing here. You can see that the OI, which is clearly formed on the call side, is on 18,000, and you can clearly see that there's a huge change of OI on 18,000 calls. So from this, what we can interpret is that the upside is capped at 18k. And you can also see there is a second highest being formed at 17,900. 17,900 and 18,000 are the two levels on the upside. The professionals or the traders, option sellers are thinking that Nifty might not cross this level. So the chart is also saying the same thing. So we can expect that there can be a limit on the upwards direction. You can also say that there is a limit in the upward direction. Whereas coming to our put side, you can also see that there is so many unwinding of the put. It also clearly says that the move was backed up with some data, right? So if we are to say the put writing, you can clearly see that 17,500 has the highest OI in terms of the put writing. So that can act as a potential, but it is not as convincing as the call writers are. So probably that data might build up when it is closer to 17,500. Currently people are not that confident. They are very confident in writing calls rather than writing puts. Currently 500 has the highest open interest. Apart from that, you can clearly see that 17,000 has highest open interest, but there's a 1,000 point gap from current, maybe 770 points from where we are, right? 760 points from where we are, right? For the upcoming week, what I see, as I clearly said, that 18,000 to 17,500 would be our range for this as per the OI data as well as the chart. That being said, time to wind off this video. Until we meet in another video with another interesting analysis. See you in another video. Happy trading. Bye bye.